Friday's technology rally brought some much-needed relief to markets thanks to one major news. Oracle will host TikTok's US users' data, meaning that they could sell their cloud capacity to someone finally. So the stock rebounded over 6% on Friday, while Nvidia and the broader Nasdaq also climbed. But the spotlight quickly shifted this morning to China, where China's Moore Threads announced that its new AI chips can rival Nvidia's H200 chips and are also narrowing the gap with Nvidia's next generation Blackwell series. So technology stocks are up this morning in Asia, but questions remain. So welcome. You are watching Swissquote's Daily Market Talk. I'm İpek Özkardeşkaya. We are December 22nd, 2025. And everything that I will say in this video are based on my own opinions, and this is not financial advice. So Friday's rally among the technology names came as a much-needed relief, obviously, to global financial markets, and it was triggered by one and simple piece of news. Oracle is going to host TikTok's US data under a new arrangement between the US and China to continue TikTok's operations in the United States. The deal is yet to be approved in the coming hours, but assuming that everything goes according to the plan, in the context of this deal, Oracle will be responsible for storing and securing the US user data on its cloud infrastructure and helping oversee cybersecurity and algorithm safety in this deal. So it is a big deal. It is a big role to play in this context, given that half of the US uses TikTok. And for compensation, it will hold a significant equity stake in the new US TikTok business. Roughly 15% for Oracle specifically, with the overall investor group securing a majority. But above all, Oracle gains with this deal a strategic foothold in a high-growth digital platform via its cloud services, and that's a golden narrative for its growth profile. So no wonder the share price rebounded more than 6% on Friday's trading session after a more than 45% plunge since the September peak, and the rest of the AI and technology complex in the US rallied as well on this piece of news, seeing how the data centers and massive computing power that they are co-building could turn into cash. So Nvidia jumped nearly 4% to $180 per share last Friday, and Nasdaq rose 1.30% and returned above its 50-day moving average. So all this is good news, but the pain among technology is not over just yet. Because one, the TikTok deal is modest in size relative to the scale of Oracle's overall business and its significant debt and ongoing investment demands. Hence, the deal alone will not give a reason to investors to reverse the recent appetite loss on these leveraged debt and leveraged deals, and won't answer the question of where on earth will the revenue come from to match such big debt and investment, and whether the revenue will come soon enough before the technology that's invested in becomes outdated. So the good old questions that investors have in mind since a while now. And second, because the news goes so fast these days, because today the Chinese chip company Moore Threads, that was built by an ex-Nvidia executive and which went public via an incredibly buzzy IPO just a few weeks ago in China, remember, announced to release new chips to compete Nvidia's Hopper series. They say that their new chips do compete with Nvidia's H20 and H200 chips, and it also closes the gap with the next generation Blackwell series of Nvidia. This is a significant development, mind you, for Nvidia in the context of this US-China chip war, because remember, the US government has just allowed Nvidia to sell its H200 chips to the Chinese few weeks ago, and that was a time, just 2 weeks ago, yes, but it was still a time the H200 chips of Nvidia were considered as being stronger than any chip that was produced and available for the Chinese from the Chinese domestic producers for at least the next 2 years. But things can change very rapidly, as you can see. Now Moore Threads says that they will start producing these new chips that will also be as strong as H200 chips of Nvidia as early as next year. In other words, they say that there will be no need to buy Nvidia's H200 chips, as Moore Threads new chips are going to be as efficient as the H200 chips from Nvidia, and they will also improve their energy efficiency by 10 times compared to their own previous GPUs. Then there is the geopolitical dimension of the problem, right? China never gave a clear guidance regarding whether they would let the Chinese companies buy NVIDIA's H200 chips. And it's true that the smaller the efficiency gap with the US peers, well, the more the Chinese government will have the interest in supporting its own domestic chip makers in the context of this US-China chip war. So the news are quite supportive for the Moore threads right now, but they also come with a few red flags, obviously, otherwise it would be too easy. So these red flags could be: one, designing the chips is one thing, but manufacturing them is a complete other thing, and Moore threads cannot go to TSMC like NVIDIA and other biggest chip makers of the world do for producing their own chips, as the company Moore threads was placed on the US Entity List in 2023, which prohibits it from partnering with TSMC and other advanced Western foundries to build these chips, so it must partner with a local foundry. In that context, SMIC, which is the leading chip-making facility in China, can actually produce these new chips for Moore threads using China's best available technology to date. But China's best available technology is still a generation or two behind TSMC's, meaning the chips can be made at scale, but they won't necessarily match the very top global GPUs in efficiency or performance. And the second red flag is many companies have already built their systems around NVIDIA's software and their ecosystem, and switching from one to the other, so switching from NVIDIA's to Moore threads, demands a period of transition and costs associated to this transition, of course. And Moore thread system is yet to prove itself to be reliable as NVIDIA's. So questions remain, but you know what? At the end of the day, if the Chinese government decides that this is the way to go and there is no other way, the Chinese companies will have no choice but to adopt anyway. After all, it's not only about chips themselves, but it's also about the technology independence and in the context of the chip war between US and China. And China knows that a short-term pain could be a long-term gain in this battle. So Moore threads is up by 1.87% in Shanghai at the time I'm talking here, while SMIC is up by more than 6% in Hong Kong. So the bottom line is China hasn't said its last word just yet. Now, beyond China, the technology-heavy Asian indices are up this morning, with the Korean Kospi Index, for example, accumulating gains above 2%, while the Japanese Nikkei started the week on a strong footage but is giving back early gains as the session goes on, certainly also discouraged by a heavy sell-off that we see in JGB's complex this morning that actually sent the Japanese 10-year yield to 2.10%. Earlier in this session, the dollar yen is also retreating this morning, not necessarily on higher yields, but on fresh threats from the Japanese authorities that positions against the Japanese yen are very heavy and they are very much one-sided. So everybody is shorting Japanese yen basically, and that a direct intervention from authorities is possible and could eventually clear the short bets against the yen without, however, reversing the overall direction. But still, the yen's forced gains this morning are waiting on the US dollar, while gold has spiked past the $4,400 per ounce level this morning to a fresh all-time high level on the back of rising tensions between the US and Venezuela. That is also pushing oil prices higher this morning, with the barrel of US crude trading past the $57 per barrel level. Brent crude, on the other hand, cleared the $60 per barrel resistance in a move that could remain short-lived, but we are still in a period of rising geopolitical tensions that are translated in higher oil prices right now. So this week will be a holiday shortened week in Western markets with the Christmas break on Thursday. But before that, the US will be releasing its latest GDP update, expected to show that the US economy grew 3.2% in the third quarter, but price pressures may have increased as well. Then the week will slowly die out as we head to our final Christmas parties of the year and take our feet off the gas for a few days. This is all for this Monday. I'm İpek Özkardeskaya, and thank you for joining me, and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions, and your questions below as usual. Follow us on Instagram, on X, on LinkedIn, but also on WhatsApp, Threads, Telegram, and Blue Sky for regular market updates. Subscribe to our YouTube channel for daily market commands. And please don't forget to hit the like button on these videos to let us know that you enjoy them. And I will meet you again tomorrow. And until then, good day trading.
Trading and investing carry risks, including capital loss. CFDs in digital assets are volatile and not suitable for everyone. Swissquote assumes no responsibility for accuracy or losses from its use. Products and services are offered only where legally permitted.